All right, Aman Desai, promoter and whole-time director of Aether Industries, joins us now. Let's connect with him and understand how things have transpired for Aether for the quarter gone by. Aman, now for the quarter gone by, there seems to be a marked improvement both on sequential revenue and year-on-year revenue. Could you quantify for us, this is volume-based growth or this is value-based growth?
Yeah, Nikunj, good morning. Thank you for having me again here. Pleasure to be here. Yes, we have posted growth, reasonable, significant growth on both the revenues and the profit and the EBITDA year on year as well as quarter on quarter. And these have been led primarily by value-based growth, where we have introduced new products in our existing production facility as well as our new greenfield production facility. And that's the primary backing behind the growth that you're seeing.
Okay. The fact that raw material prices are down and margins have expanded, is this a one-off adjustment or this is a linear trend according to you?
No, I think this is not a one-off adjustment because the raw material pricing are not down. They have kind of stabilized back to where they historically always have been. And so we anticipate the raw material pricing to remain the way they are right now for the foreseeable future, and the selling price of the products to remain the same. And so we anticipate this to stay and continue on the same trajectory as it has been in the last quarter.
All right, Aman, hi there, morning. Let's also talk a little bit about your outlook in terms of the R&D spends, because that continues to inch up. Can you walk us through what the pipeline is looking like in terms of your client additions, new initiatives, etc.?
Yeah, thanks for that question. We are spending about 7.7% of our overall revenues on R&D expenditure, and that is a significant expense. We continue to invest in R&D. R&D remains the fundamental base and the growth driver and the engine of the company, which it always has been. We have tripled the R&D infrastructure in the last year, tripled the pilot plant in the last year. We have added, in this last quarter itself, we have added 10 new customers, I believe, 7 of them in the large-scale manufacturing business model and 3 in the CRAMS business model. The CRAMS, which is the contract research and manufacturing services business model, is we are very upbeat and positive about this business model, as we always have been, and rightfully so. We have made a couple of announcements in this last quarter to this regard as well, and we will continue making a couple more announcements in the quarters to come. And so we are seeing a lot of inquiries come in. We are seeing actual inquiries being translated into revenues in a very speedy execution mode by multinational innovator customers across the industry spectrum. So very upbeat about our R&D pipeline. It's packed across all business models with various launches happening in the quarters to come. We are launching 5 new products in the upcoming greenfield manufacturing site in the next 3 months, and we have 3 further agrochemical advanced intermediates in the pipeline as well for an additional greenfield site.
Sure. You know, since you talked about the revenues, and I'm going to talk about exactly that, given that it's been a very steady growth, 11% year on year, 19% sequentially, and clearly, you know, like you highlighted, you're seeing better demand as well. Tell me, what is it that you foresee now from segments like contract manufacturing, CRAMS, etc., because they have been strong. Going forward, what kind of growth rates can you expect from each of the segments?
Yes, if you look at our CRAMS business model, I think we've done 60 crores, which is a 70% EBITDA margin model in the 9 months ending this year, as compared to a total of 48 crores in the entire last fiscal year. And so significant growth in the CRAMS business model. Contract manufacturing has also been slowly inching up as well, and we are at 35% of our overall revenue bucket is coming from contract manufacturing, exclusive manufacturing, which are products which are translated from the CRAMS model into the manufacturing mode. And that's when the shift happens in this business models. We are launching 5 new products right now, which are advanced pharmaceutical intermediates, where we are making these intermediates for the first time in India. Prior to us, these were net hundreds of crores of imports into India, which we are now launching in India for the first time. And these will all contribute to the large-scale manufacturing business model in the next 3 months. And so the plant has been commissioned as of a few weeks ago, and the production has started. And stepwise, we will launch 5 new products, which will all contribute to the large-scale manufacturing business model. And so we have fundamentally created the pieces very well, I believe, in all 3 business models with an equal distribution. And we have a packed pipeline in all 3 and anticipate growth in all 3 business models today.
Good morning. So, we know about the capex. It could go up to 3 years. There's a new manufacturing site as well in the quarter gone by, and that has been under review, which we'll talk about in just a bit. But Aman, what I would like to speak about, and this has been spoken about in the last year, how India can increase its share in the global pie of specialty chemicals to about 6%. You in the last quarter were talking about a lot of inquiries from Europe, saying it's a very interesting space. But now that, so much more is being said about the recession, the war, which is still underway. What has it meant for your company and Europe? Have any of those inquiries even translated into revenues and orders?
Yeah, Nintara, good morning. Thanks for the question. In terms of actual inquiries being translated into revenues, especially from Europe, yes. We have seen one particular inquiry gone into mid-size manufacturing, still in the CRAMS business model, but we anticipate that going into the exclusive manufacturing business model in the next month. These inquiries are real, and these inquiries are irreversible. And so increasingly now, especially in Europe and the US, they are much more focused now on the research, and the development is no longer there. The development requires now partners for them in the East, and that's historically been China. But as I've always been saying, if now this is a golden age for the Indian chemical industry, and if we can compete in terms of quality and cost and time and intellectual property protection and trust and relationships, India is the preferred destination. And so still remain very upbeat on the next few years for the Indian chemical industry in general. And at Aether Industries, we are hopefully putting our pieces well into play on the chessboard to kind of capitalize on these opportunities that are coming in. I don't know if I answered your question, Niyantara, but
getting your chessboard ready. If you're getting a chessboard ready, are you doing so with an M&A war chest as well? I was talking to some large deal makers over the weekend, and the sense is that in this year, from India Inc., what we can expect are maybe heightened M&A activity, particularly for European assets.
Yeah, Niyantara, great question. The answer is not really as much. We are getting the chessboard ready, but we are also being very careful on where we put the different pieces, and especially the bishops and the queens and the kings. And so very preliminary discussions going on in acquisition front, but if we do go into it, it will be a smaller based acquisition, which will be focused on R&D capabilities and not on manufacturing. But again, I emphasize on the smaller part of that because we have our own greenfield manufacturing sites coming up, significant capex coming up, and we want to focus on where we are good at. And so we are very careful and pragmatic in our approach towards expansion, and especially for acquisitions, we'll be very careful, but looking at it nevertheless.
Great having you on the show today, and congratulations once again for an excellent quarter.
Thank you, Aisha. Pleasure. Thank you.